tax season is swiftly coming to a close.
The IRS has been accepting and processing tax returns for 2022 since January.
So far, nearly 72 million individual tax returns have been received.
The deadline to file your taxes, if you owe the government money, is April 18th. After that, you'll need to file an extension. The IRS warns this year's refund checks will most likely be a little smaller from previous years.
Okay, what's new? For more on this, I am joined by David Peters. He's a financial advisor and certified public accountant. You know, this topic, I'm glad we weren't live when we were talking about taxes. What are some last-minute tips as filing season winds down for those who are still struggling, as some of us are, because we procrastinate?
Yeah, so for folks that are procrastinating, I think that one of the most important things to keep in mind is that if you're planning on working with a CPA, a lot of CPA firms do have a cutoff date where they will accept new clients and be able to actually get your return out by the filing deadline, by April 18th. So a firm might say, well, you know, for anybody who comes in after April the 1st, we may have to file an extension. So I think that that's probably the first thing, is just making sure that we're aware of that if you're planning on working with a CPA.
And as we've mentioned, some folks could see smaller refunds this year. Explain why that is, and, you know, give your best advice to people who get overwhelmed by this topic at this time of year.
Yeah, so the smaller refunds are mainly due to the fact that a lot of the COVID incentives that we've had over the last couple of years are no longer at play. So things like the recovery rebate credit, which was the credit related to the stimulus checks, that's not a thing in 2022. We also had the child tax credit. We had an expanded version of that. That's no longer available either. And so as a result, it's kind of like we're going back to the way things were kind of pre-COVID. And so as a result, refunds are going to be lower. My best advice for folks that are still scrambling is to just basically make sure that your forms are organized for your tax professional who is ever going to prepare the return. That's going to keep costs low because they're not going to have to be sifting through a lot of information in order to get your return filed. Also, make sure that things are actually marked final. There are certain tax forms that where we tend to send out estimates ahead of time, especially Schedule K-1 if we're investing in a partnership or an S corporation. Also, too, making sure that your 1099-Bs, those brokerage statements, making sure that those are final as well, because if we put something that's not final on the return, we may end up having to file an amendment.
And, you know, we were just talking about the failures in banking. Some people were hit by that. Is it too late to account for that? Is there a way to, I don't know, add that or deduct for that for those folks who were hit hard?
Not really, because on the personal tax return, one of the things that we took away as a part of the Tax Cuts and Jobs Act was the ability to deduct property and casualty losses in most instances. And so as a result, there's not a direct way to be able to take care of those bank deposits that have been lost. Yeah. One thing I will say, though, is just make sure that, you know, if you are expecting a refund, make sure that the banking information is correct on the return before you file.
All really good advice. Things that you wouldn't think of.
You want to make sure you do get paid.
David Peters, thank you very much on what is, I assume, your favorite time of the year. Thanks for being with us today.
Thank you so much.